We'll get started here. Welcome everyone to APRA-New York's webinar, The Overlooked Charitable Power of Crypto. I'd like to welcome Dennis Ladd and Arthur McGinnis from Fidelity Charitable. We appreciate you guys coming on today to educate us on cryptocurrency and how that's affecting the fundraising world. I know this is a new area for myself. I've heard of different cryptocurrencies, but I'm excited to learn something new here and expand my brain a little bit this noontime. So I will turn it over to the two of you. Welcome. Thank you.
Excellent. Thanks so much, Joe. Really appreciate you and all your help and partnership here in putting this together. And definitely thanks again to the team at APRA-New York and to all of you joining the webinar today. We really appreciate you all taking the time out here in the noon lunch hour. Again, it's Dennis Ladd here, and I'm a charitable planning consultant for Fidelity Charitable based in New York. I cover the entire tri-state region, so that's really New York, the state of New York, northern New Jersey, and Connecticut for the company. I'm really excited also to have my partner here, Arthur McGinnis, on the line with us. I'll be turning the presentation over to him in a little bit, but really excited to have Arthur on the line as well. He is an attorney and a director from our complex assets team. We partner often very closely together on all kinds of different contributions related to complex assets like cryptocurrency and some others that we'll review. Really I think today's topic, again, the overlooked charitable power of crypto. The timing of this presentation couldn't be better, especially as we all approach the prime time of charitable giving season. It's going to be really a great timing for that, especially looking at some of the price charts recently for Bitcoin in particular. I'm going to be leading things off here for the presentation, and then we're going to review some of the trends that we've seen just in kind of philanthropy from a larger lens, and then what we've seen so far in 2020, and then set the stage a little bit for then Arthur to take over and really get into some of the more details around complex assets or liquid assets like cryptocurrency and Bitcoin. But feel free to submit questions through the chat. I see the chat here is lighting up a little bit, so definitely feel free to submit questions through there. I'll try to be good about taking a look at that. In addition, we're going to definitely leave some time at the end to hopefully answer any of the questions that come up during the presentation today. So moving on to the next slide. All right, hopefully everyone can see our pictures. That's what we look like if you don't see us online here already, but that's me, that's Arthur. We're your hosts today, so thanks again for joining us. All right, so who is Fidelity Charitable? We've been around since 1991, and we really pride ourselves on just the excitement that we get to be able to work with over 200,000 donors here across the country that have supported over 300,000 nonprofits. Recently, we became the largest grant maker in the United States, which again, we're extremely proud about that, overtaking the Bill and Melinda Gates Foundation. Looking a little bit more into some of the trends though, and that's really what we wanted to highlight today. The current landscape of philanthropy, and this comes from our friends at Giving USA. Many of you probably are familiar with this chart already, but the thing that we wanted to highlight here is just so exciting to see where the trend is going. At over almost $450 billion last year was given to charities, and just like such a great number, big number to see. We're hopeful that number is going to be even bigger in 2020 when the report comes out next year. Dissecting this slide a little bit more, on the right-hand side, you can see that a majority of the giving is actually done by individual donors, about 69%. These are a lot of the donors that you and I are working with each day that want to support their favorite charities and making these charitable gifts. So, again, the big takeaway here: philanthropy is continuing to increase, and it's really led by individual donors. A lot of people think that it's these big corporations um, or other sources, but it's really the individual donors making that push, and that's been really tremendous to see. I thought I'd take a minute just to highlight just some of the trends that we've seen. We're all living through this terrible pandemic, but what's been so inspiring in particular is to see how our donors have just incredibly stepped up during these difficult times, in particular around COVID-19 response. Um, some of the things that we've seen in particular is just this really increased support of human services. And when I say human services, really think, homeless shelters, food shelters, services that are really helping people on the ground. We've seen a huge uptick in that particular area in particular. Going to the right a little bit, accelerated generosity. That's been really exciting to see. We've seen donors, again, step up. I looked before our call this afternoon at our website at fidelitycharitable.org. We have essentially like a real-time ticker on there. It's showing that over $6.4 billion has been made in grant recommendations by our donors. So we're looking at year-end type numbers, and it's only November 17th. So again, really exciting to see people step up now and not waiting, because people, of course, are in need all over the place. Not surprising. When you look in the bottom left-hand corner, we've seen donors really prioritize food security. Matter of fact, a staggering 667% increase in free food programs nationally. So just really seeing donors focus on food programs in particular. But of course, on the bottom right, we're seeing donors still continue to support their favorite charities, their alma maters, all those organizations that are near and dear. They're doing this in addition to a lot of that work. So just really inspiring to see, and very excited that we're all in this space trying to help make a big impact. So shifting gears a little bit, as we think about some common giving strategies and vehicles, I just thought I'd share real quickly, these are the 4 most common charitable vehicles that we come across in where Arthur and I sit here at Fidelity Charitable. When you look at the Giving While Living, the donor advised fund space and the private foundation space, those 2 vehicles, definitely we encounter those quite a bit. As you think about longer term and a lot of the planning and the trust and estate attorneys that we work with, a lot of their focus has been around charitable remainder trust or charitable lead trust, CRTs and CLTs. We see these 4 vehicles the most. The one thing that I'd say, at least from a trend perspective, that we've seen is that people aren't really thinking about these 4 vehicles independently anymore. We're very much seeing that donors and their advisors looking at these as kind of a combination of tools in the toolkit where they can all work really well together. Where you might have somebody that has a very large private foundation that's very focused on a singular mission like education or a scholarship program, but then in addition, they'll have a donor advised fund that sits alongside for all of their other grant making to really streamline and facilitate that process. So that's a very commonplace scenario. And then, of course, the CRT, CLT structures, naming a foundation or a donor advised fund as a beneficiary, we definitely see that pretty often as part of a larger estate planning conversation. Looking specifically at the donor advised fund platform, of course, that's where our background is here at Fidelity Charitable. This is probably one of our favorite slides that we talk about, because people are always like, well, what exactly is a donor advised fund? How does it work? Really, it's breaks down into 3 simple steps. First, a donor makes a tax deductible charitable contribution to their donor advised fund account. This makes it super easy for the donors. It helps them simplify record keeping. They get that single donation receipt, and then they can ultimately are going to support multiple causes, which we'll talk about here in a second, but allows them to really minimize capital gains taxes, especially when you look at appreciated long-term assets. And again, we'll get more into that. Secondly, grow. Once these assets are contributions are in their donor advised fund account, they have the potential to grow those assets over time on a tax-free basis, really allowing them hopefully to have more to give to charity. Last but not least, and personally my favorite part, and I'm sure a lot of other folks, is the grant making process. They can make grant recommendations to their favorite IRS qualified charities, so their favorite 501c3 charities. They do that all online. They can involve family members as part of a larger charitable giving philanthropy approach for their families, really making it super simple, turnkey, and very easy for the donors to support their favorite charities over time. So what are some of the assets that we're seeing folks fund with their philanthropy? By and large, it's amazing how many people still contribute cash, and that's what they use to fund their philanthropy. The one thing that I'd highlight there, just because cash oftentimes isn't the most tax efficient asset to give. One of the things I'd highlight is that while 80% of donors have appreciated assets, only 20% have actually contributed these types of assets to charity. So here in my role specifically, I'm always trying to work with donors, provide that education around the ability to donate appreciated assets, whether it's appreciated stock like Amazon or what have you, Tesla, or more complex non-publicly traded assets like we're going to talk about here in a minute with Arthur. It's those types of assets that oftentimes can make the best charitable asset. And one of the lines that I often try to share with people is it's all about donating the right asset at the right time. And each individual donor is going to be different. With the Tax Cares Act and some of the other recent acts over the past few years, it's always changing. So I think the more that we can provide that level of education, the better off it is for the donor. So that's something we always try to highlight. I think with that being said, I'm going to turn it over to Arthur McGinnis, who's going to talk a little bit more detail about complex assets and get into some of the cryptocurrency piece. Arthur,
Great,
over
thanks,
to you.
Dennis. And
Sure.
ultimately, the goal of this here is, for us to highlight the process. Can you hear me?
I got you now. Yep.
Oh, perfect. Yes. So the goal here ultimately, the goal here ultimately is to, one, identify these ripe appreciated assets for gifting, and go through essentially the complex asset process. And highlighting that process will highlight other assets as well, but then the focus will of course shift to Bitcoin and other cryptocurrencies. So just taking a step back, and I know Dennis had a chance to briefly go over this, but we tend to use the term complex assets interchangeably with non-publicly traded assets. So we identify complex assets essentially as any asset that is not traded on the New York Stock Exchange, also non-cash assets. So looking at that, the complex asset group, as he highlighted, it's a group of 4 attorneys, and we help assist our donors and advisors with gifting certain non-publicly traded assets or non-cash assets. And typically, as you noted, these are the most appreciated assets and the most efficient way to support charitable causes. So this is generally where donors could receive their most favorable tax treatment and make more of a charitable impact. So essentially, as Dennis was saying earlier, a good number of donors have appreciated assets. Some of those donors might have publicly traded securities, but a good number of them, most of their wealth is focused in their own either private businesses or private investments. So essentially, these are assets that, again, have a low cost basis, so it makes them more efficient to donate. But again, looking at this from a slightly different lens, a couple different things trigger here. So while the tax treatment is the same, which I'll cover as appreciated securities, some of the elements within will change slightly, as you'll see in the next few slides. So looking at this slide here, again, these are low cost basis assets with high appreciation, so they're pretty efficient to give. The donors can get a fair market value tax deduction, which is one of the primary motivators, because essentially when you gift a private asset to a donor advised fund or public charity, you're able to obtain a fair market value deduction based on a qualified third-party appraisal. And then you could deduct up to 30% of your adjusted gross income for the year that you give the asset. Additionally, another important piece here is minimizing capital gain. With respect to the portion of the asset that is transferred to the charity prior to a liquidity event, the donor themselves would in fact reduce their potential exposure for capital gains, but then also the charity, as a public charity, wouldn't necessarily pay any tax with respect to that interest. So at the end of the day, it means more money is going to charity, and the donor is reaping the benefit of, essentially a lower tax exposure at the end of the year, plus the addition of that fair market value deduction. So moving on to the next slide. And again, taking the full picture approach here, I want to look at the key diligence points for the charity prior to hopping into the types of assets we accept, and then speaking more about the crypto. So when we're examining whether we can accept donations of non-publicly traded assets, we have some considerations built into our due diligence process. We look at these 4 factors: transferability, valuation, liquidity and timing, and risk management. So from a transferability perspective, we want to understand, are there any restrictions on transfer, and are any other restrictions to consider? So generally speaking, when we look at certain types of interests, and like I said, this is the full picture. So in addition to the crypto, let's say, for example, we're looking at partnership interest or private business interest. We want to understand, are there any waivers, consents, or approvals that need to be obtained in order to legally transfer the assets to the charity? Because again, at the end of the day, once the asset is transferred, that completes the charitable gift. So generally speaking, with most of the assets, we work directly with the donor and or company's issuer or issuer's counsel to efficiently effect the charitable transfer. From a valuation perspective, and this is important here even in the crypto space, the most important piece here for the donor is needed for them as a key element for their tax deduction. So in order to attain that fair market value tax deduction, the donor needs to have a qualified appraisal of the asset on the date of the gift. So we generally have this conversation with our donors and their tax advisor at the outset, so they're aware of their requirement and that they're responsible for obtaining the valuation to achieve that tax efficiency. And this differs from the publicly traded securities that would be contributed, because for those assets, they are, again, highly marketable, well, similar to here to the crypto, but also the charity generally provides average of the high and the low for the fair market value deduction. But here, with respect to these assets on the private end, there is the need for that third-party qualified appraisal. And that's something that needs to be factored in with the cost when weighing tax efficiency and deciding on the amount to be contributed. So this is definitely important for the charity and for the donor as well. The third consideration here is the liquidity and timing. So focusing on the liquidity piece, generally when we're accepting a non-publicly traded asset, the charity, our charity is a grant-making organization, and we look for liquidity at the first possible event. So we could fund a giving account and allow for our donors to recommend grants out to other 501c3 public charities, thereby fulfilling our charitable mission. So when we take on an asset that hasn't been monetized, our focus is first identifying the options for liquidity at the outset prior to accepting the contribution. So it's important that we have this conversation with our donors so they understand our motivation with accepting the asset. Because our ultimate goal at the end of the day is to sell the asset within the next 1 to 2 years. And as initial part of the onboarding and our due diligence discussion, we do communicate our timeline and also get a sense with respect to the timing of the potential upcoming liquidity events. So in the instance here of looking at crypto, generally speaking, you do have daily liquidity. However, following the charitable gifts, the gift to the charity itself, it is at our discretion to when we find liquidity and fund the giving account. And then finally, the last piece here is risk management. Risk can arise in multiple formats, such as reputational or financial risk. Ultimately here, we want to understand, are there any liabilities to the charity, or whether it be financial or legal, and then what can we do to cap that? So with respect to some assets that we take in, we might have some tax liability for those partnership interests or S Corp interests, and other interests, deeper look at the actual business operations to understand what is being contributed, and are there any legal liabilities with respect to the acceptance. So to summarize this slide up, ultimately we want to determine if the donor can gift the asset to the charity, can the charity accept the asset, and then what can the charity do with the asset. So I understand at what stage is the asset in being sold, depending on the nature of the asset, what is the exit strategy, including any backup strategies. And then also obtaining a qualified appraisal to substantiate deduction is important. And then again, minimize any risk to us as the charity in terms of either representations made or any other legal or financial risks that are associated with the asset. So moving on here to the more directed point of the slide, ultimately, here are the examples of complex assets, including the crypto, which falls under those certain alternative investments. But ultimately, we generally talk about private company stock, whether it be an S Corp, a C Corp, real estate, private equity interest, limited liability and limited partnership interest, restricted stock, insurance interests, oil and gas, and certain other alternative investments, including Bitcoin and other cryptocurrencies. So predominantly what we see on our end are private company stock, LLCs, and partnerships due to the flexibility that the structures provide. And this continued to be the trend over the years for the majority of the assets we take in. We do see a lot of restricted stock as well throughout the year, especially toward the end of the year as executives are looking to essentially evaluate their equity compensation and ultimately achieve their goals. And then the remainder of the interest are really considered alternative investments. So we do see some oil and gas and grain and other agricultural assets. And similar to the restricted, we do see a good flow of Bitcoin and other cryptos depending on the market. So ultimately, this is something that we've done fairly often. We do have a dedicated team to for this process as well. And ultimately, a fairly efficient process. So at the end of the day, we have the initial introduction with our donor. We discuss what they're looking to do and what they're looking to contribute. And then we have forms which are essentially help not only facilitate the gift, but obtain the information that we need as the charity with respect to accepting the gift. So moving on to the next slide, I do want to focus more on the crypto piece of it. So looking at Bitcoin specifically, as that's of course the most gifted type of crypto. Essentially, the current price, as Dennis was highlighting earlier, is closer to that 17K essentially per unit here. And this market is really what's driving the amount of contributions this time of year. Of course, as the price goes up, so does the appreciation. And the real benefit of not only, of course, selling a portion of the interest, but also offsetting some of that gain by contributing some of the assets as well. Because again, like I said, the dual benefit here is one, with respect to the appreciation, the donor is not going to pay the capital gains for the portion that's contributed to the charity prior to the sale. And then also they're able to get that fair market value deduction, which is based on that third-party appraisal. And just to touch on that appraisal additionally, the depth of the appraisal is generally, it's a lot lighter lift than other types of private assets. So while there is that appraisal requirement, the cost to the donor and the complexity there isn't necessarily as thorough as with other assets that are contributed. looking at this little thought bubble here, Fidelity Charitable does accept a wide range of crypto, including Bitcoin, Bitcoin Cash, Ethereum, Litecoin, and Ripple. And just to give you, before we hop on to the next slide, just to give you a quick summary of numbers, I was able to pull together some numbers here with respect to Bitcoin received in 2020. It's about just under $3 million worth of Bitcoin. Similarly, we've taken in some Bitcoin Cash and Ethereum as well. But again, Bitcoin is the mostly gifted, and since inception, we're over 115 million for the gifting of Bitcoin. So this is since we started accepting in 2015, I believe. So moving on to the next slide. Here is just a good example of what it looks like of gifting appreciated securities, and in this case, Bitcoin. So let's say the donor purchased the Bitcoin in January 2019 with that appreciation by November 2020. So the asset is now valued at 1 million with the long-term unrealized gain of 800,000. So ultimately, if this is sold outright, the donor could be subject to 20% capital gains and 3.8% Medicare surtax. So using this information for the calculation, let's say the donor donates Bitcoin valued at 1.1 million. So if you look at the left-hand side here, if he or she sells the Bitcoin and donates the after-tax proceeds, you're looking at long-term capital gain of 190K with the remainder to go to the charity of 909,000. So ultimately, at the end of the day, what this means is the donor has additional taxable income. The charitable impact of that contribution is greatly reduced by the donor actually paying the tax. If the donor alternatively gifts the asset to the charity prior to the sale of the asset and the charity sells the asset, the capital gains, of course, would be zero because, again, the charity would own the asset prior to that liquidity event. And then the full benefit of the gift would benefit the charity and then, of course, future charitable gifts to other charitable organizations. So this allows for the total value of the asset to flow through for charitable causes. And then finally, just a little highlight here. Essentially, at the end of the day, as I said, it's $190,000 more to charity with this process. And really, it's not something that's terribly complicated to do, but at the end of the day, it does benefit more charities and more charitable causes. So Dennis, I think at this point, I'll kick it back to you to wrap up on a few slides, and then we'll turn it over to Q&A.
Sounds great. Thanks so much, Arthur. Thanks for going through some of the details there. Just to kind of wrap things up from a presentation perspective, at least, this is where hopefully we can be a really good extension of your respective teams. It sounds like we have folks across the country, even across the ocean, which is fantastic. Really think of us again as hopefully a support or an additional resource for your teams. What we've seen is that a lot of development offices, they often don't have these types of resources, folks like Arthur that are internal to their teams. So being able to partner with us and think of us as a resource for you as you encounter these types of scenarios, hopefully we can help simplify that for you and your team and also the end donor, really guiding them through how this contribution process works, how to talk through some of those potential tax implications, but really, again, working kind of hand in hand with our team as we walk through that. I'm sure Joe will share my contact details and Arthur's as well. Again, we're here to hopefully be helpful resources in this conversation. One quick story that I'd share, just kind of, it's actually very similar to the slide that Arthur walked through, but back in 2017, when Bitcoin was also near some high valuations, we received a call, I think it was in mid-December, from a development officer at a private school in New York City. apparently one of their board members was interested in the possible contribution of Bitcoin to the school. The school actually had closed for winter break, and the development officer reached out to our team here at Fidelity Charitable to engage us on that conversation, because he was essentially a one-person show at this school on the development side, and we got on a call with the donor and with the development officer, kind of talk through the interest in contributing that Bitcoin, ultimately to be able to make a grant recommendation to the school. We were able to successfully complete that. We set up a donor advised fund account here at Fidelity Charitable for their donor. Once the asset was received by our team, his account was funded, which was terrific. And then through that process, he was able to make the grant recommendation, not only to the school, but also to some of the other favorite charities that this donor happened to support. So it was really just a great story of how we were able to partner together. But also, I think it also showed that the development officer really put himself in a good position with this donor, because he was able to make something happen that seemed like a little bit of a long shot, especially that late in the year. So I think the donor seemed to really be impressed by that as well. So anyway, just thought I'd share that because it came to mind as Arthur was going through his slides there. But I think at this point, I'd maybe turn it back to Joe to see if you all might have any questions.
We do have a couple of questions. I'll start with this one. When crypto is donated, charities can sell and convert it to cash, right?
That's correct. Yeah. So as part of the process, I mean, ultimately, what we do is, like I said, we have forms that get the information needed, but also one of those forms not only gives us the information, but it also provides the wallet information with respect to the exchange that we work with. So ultimately, it provides the donor with those delivery instructions. Once the asset is delivered into our account, we would essentially receive the gift, and then, of course, at the charity's discretion, we would liquidate the crypto and essentially fund the giving account with those proceeds.
Okay. Our next question is question regarding Bitcoin donated anonymously. What are the risks of receiving funds that are complicated? An example of this was the hacker group that donated proceeds from a hack to a nonprofit. I'm just thinking about long-range implications of accepting these funds and the risk we run by accepting them.
So for the process, and again, on our end, just essentially the way it's structured, we do have, the appropriate checks in place with respect to tracing or essentially tracing back or tracking the donor of the contributed asset, as there are AML checks at the exchange that we work with as well. So, I don't believe that we would ever run into a situation where it would come through anonymously. But again, once we identify, of course, who the donor is and the asset contributed, once it's contributed to the charity, then we would essentially liquidate the asset and fund the account for grant making. So at that point, I do see, see there being a risk, of course, if you accept the crypto anonymously, because you won't be able to essentially track those, the prior ownership. But in this instance, we do have that essentially tied up on our end.
I would just add to Arthur's point, we have a checklist that we go through, when we do have an interest in this type of contribution, we really try to determine, how the asset, how the crypto was acquired. We confirm their email address, that they're going to want to use when they send us the contribution link, and really try to go through the details of confirming, taking the anonymous part out, I guess, is probably the best way to think about it.
Okay. just another question here. So is it a good best practice if a nonprofit has a donor that wants to donate cryptocurrency to them? Is it a good best practice at this point for a nonprofit to engage with an organization like Fidelity Charitable rather than trying to figure it out themselves?
So, yeah, so from I think a cost and an efficiency basis, it's, and I'll let Dennis probably speak to this one. It probably makes more sense if the charity doesn't have an established program for accepting crypto or other similar assets. It might make more sense to work with a charity that does have that process in place, because getting up to speed and getting the process running did, not only take time and resources, but, of course, it may eat away at some of that efficiency of gifting the asset.
Okay.
Yep, I agree. I think just given the experience and the depth of knowledge that we have in the space, being kind of an early entrant to being able to receive Bitcoin or cryptocurrency, definitely feel free to lean on us as part of that. Again, as Arthur mentioned, I think at the beginning, this is really our mission, is to help facilitate and streamline the process, so there's more grant making that can happen here in the U.S. So we get excited to help in that effort.
Yeah, I think of many nonprofits that have established processes for if they get land or property donated or stocks and bonds donated. Those are standard things that have been done for decades now, where most nonprofits might not have it in place on what do we do with digital currencies, and sometimes that can be both a technological education and a currency education for everyone involved.
Yep.
So does anyone have any other questions they'd like to ask? It's been a great education for us all.
Excellent.
I don't think we have any other questions. Thank you, Dennis and Arthur, for educating us today. Oh, one question just came in. Do nonprofits need a Bitcoin wallet of their own if still working with Fidelity?
So if you're working with Fidelity Charitable, then essentially no, because if the donor has a wallet, we have a wallet, they would deliver the Bitcoin to us. We would liquidate, and then the proceeds, the cash, would be available for grant making. So at the end of the day, the charity, if they received a grant recommendation, it would be in the form of cash.
Okay. Also curious if there are any chances of government intervention if a nonprofit receives crypto that gets seized or determined to be illegal in some way.
So I guess addressing that question, while I can't provide any, I guess legal advice here, but ultimately, as part of the checks that we provide on our end, we do have a fairly certain understanding as to, where the crypto is coming from, and have the comfort that once received and liquidated, essentially there, wouldn't be any clawback or fallback there. That being said, if there, of course, is any government intervention, I assume, we'd be subject to, as we are to federal laws, things may come up from time to time.
And Fidelity handles the valuation, correct?
So we don't handle valuation with respect to non-public assets, or in this case, crypto. There are resources out there from our faithful firms. There's also a similar group in the space that I don't know if Dennis wants to talk about, but they do valuation specific to crypto. And like I said, the list there is a lot lighter than doing private business, partnership, private equity valuations. So the cost is much lower as well.
If a development officer brings a donor to Fidelity, then does Fidelity see an obligation for directing funds to that particular charity if Fidelity sets up a DAF for the donor? Do they help the development officer that brought them the donor?
So, Dennis, you want to address this, or I could hop on?
Yeah, sure. I think like we very much try to play a very neutral role, in the grant recommendation process. We really try to leave it to the donors to focus on what are the organizations that are most important to them. Of course, keeping that in mind, how the donors got to us is important part of that process though too. So we recognize that if we can make it easy and facilitate that grant recommendation that the donor wants to send in that direction, then that's exactly what we'll do. But we can't really recommend any one charity over another. That's we kind of leave that to the donor's recommendation, if you will.
Good. These are all really great questions.
For sure.
So
Yeah, and please, as more questions come up, Joe, I'll definitely make sure that you have my contact info, and and then we can get that across to folks, and they can definitely reach out directly if they want to have more in-depth conversation on any of these points.
Definitely. I will make sure that it's included in the follow-up information that's sent to everyone.
Okay.
So
I saw the follow-up question here. Maybe that's okay. Sorry, maybe not.
So we have one here. I don't understand how Fidelity can liquidate the crypto but not provide a valuation.
Got it. So, so similar to the way that the assets are treated on our end, the charity, the Fidelity Charitable, is the recipient public charity. So, with respect to any non-publicly traded assets or their alternative assets here, we would essentially acknowledge receipt of the gift on the donor's form 8283. But there is a separate valuation requirement for essentially a third-party qualified appraisal. So for Bitcoin or crypto, it does fall into that private bucket where essentially triggers that IRS requirement for an appraisal. Like I said before, how it differs from the publicly traded appreciated stock. For publicly traded, generally speaking, the standard is providing an average of the high and the low on the day it was trading for the FMV. For other, for the other assets, the requirement is really on the donor. So we could, of course, provide receipt of the gift, but they would be needed to obtain that appraisal. And our mission is essentially to further philanthropy, and we administer a donor advised fund program, and that's currently, the only offering we have at this point.
Perfect. I think we will wrap up there for today. This has been great. Thank you, Dennis and Arthur, for sharing your knowledge with us today. This has been really great for APRA-New York, and I know this has been a wondering topic for many prospect researchers and fundraisers. So great, thank you.
Thank you all. Really appreciate it.
Thank you for having us.
Yeah, thanks so much, Joe, and all your support. Appreciate it.
Everyone have a good afternoon.